you literally have nothing to lose. So let's begin. So a little bit about ProFundCom. We've been going for 20 years, and we specialize in helping fund managers raise assets through marketing automation. So we have 400 users of our product, and we connect. We're not a CRM. That's very clear to say. We connect into the usual suspects like Dynamo, Backstop, Situate, Salesforce. So we integrate into Salesforce data and build out marketing automation through that. Where we're very different is then we use that data to help managers work out the impact that they're having, their marketing teams, the impact they're having on raising AUM, and at the same time bridging the gap between the marketing function at a fund and the sales function at a fund. We also generate quarterly reports that most people, hopefully on this webinar, are receiving, but if you're not, you will be receiving them. And what we also do is we also run an annual digital review, which will be coming out Q1 next year. So straight into it, what steps, the step-by-step route of converting cold leads into prospective investors? Well, the first thing in all of this is how do you identify where your cold leads exist? Now, essentially, the prerequisite is that you are sending emails out, you're sending out fact sheets, you're sending out some form of performance distribution, which you are doing to existing investors and prospective investors, and you've been doing this over time. It also kind of makes a supposition that you have some form of content marketing in place, where you are sending out research, market commentary, or the such to a existing user base. The other part is also, this doesn't assume you're using ProFundCom. You could be using any other distribution product that's out there. Pardot, Marketo, MailChimp, ActiveCampaign, Fill Your Boots. This is really all about the processes and the discipline you need to have in place. So the first question is, how to identify my cold leads? Well, we found that there are three key areas of what we call cold leads. So a cold lead is, before we get into it, by the way, cold leads are essentially your lost readership. So who are the people that have engaged with you in the past, have read your content, but over time, in the last period, so in the last 3 months, have stopped reading what you're sending them? And we call that lost readership. So who is your lost readership? And you can do this by essentially using VLOOKUP, looking at your base, looking at a bit of a time series analysis to say, who are the people that have stopped reading, but historically have read our stuff? That's the key bit, historically have read your stuff, okay? So that's the first list. That's the first list of people you need to go after. The second part is the people who are on your database that are not engaging with you at all. So these are people who have never engaged with you. So this almost, look, you can put all this together or you can segment this out. But there's a reason they're in the database. Now, what you do need to do with people who have not engaged at all is check whether they have bounced. So whether those emails actually exist or not. If they do exist and they're not being hard bounced, they suddenly become part of the list. If they are hard bouncing, best practice is to take them off. Okay, so that's the first two segments of what the cold leads are. And finally, the other definition is what we call low lead scores. So these are contacts who have sporadic engagement with you. So they may not have over a year, they may not have engaged with you every month. They may not have engaged with you every couple of months, but maybe they score in, as they say, once a quarter or once every 4 months. So there is some interest, but not enough to potentially move the needle. But what these three lists give you is it kind of gives you the ability to say, well, actually, traditionally would say, well, let's go after people who've not read anything we've sent them. But there is a subtlety to how you create from one cold list 3 lists. And what that then does, it gives you, as I mentioned before we started, 3 very, very specific channels to push your content out through. Now, those, like I said, those channels, I'll come to it later, those channels could be white papers, it could be thought leadership, it could be videos, it could be inviting to an event. So remember those as we kind of go through. So remember 3 channels, because they're 3 essentially categorizations of cold leads. Obviously, cold leads, if you're a detective, is actually dead bodies in a field. But like I said, there's only one type of dead body, 3 types of cold leads. So what do you do next? So that's step 1, identification. Step 2 is nurturing them, the nurturing process, or as a lot of people call drip campaigns. So essentially what you want to be able to do now is to have a process, and again, a regular discipline process, where you essentially are building out automations. So these automations create an echo chamber, and an echo chamber for the people you're marketing to, potentially across these 3 channels, three mailing lists. Now, assume you've got 3. If you've got 1, hey, fill your boots. If you don't have enough content, just go with 1. So what you want to be able to do, you want to be able to send content out. You then want to, and you can send content out. It could be content that's downloadable, event registration, but you want second tier engagement. You don't want people just opening an email or reading an email and being done with that. You want something a lot more tangible. And the reason you want something more tangible, because you are trying to create demand and you are trying to capture information as opposed to signals of somebody opening something. Again, 2 very key differentiators. So once you've got the signal come through that they're interested, you then wait a period of time, send them some additional content. Now, you can wait 14 days, 30 days, 90 days. But what then happens, if you look at the very last step, is what you can change your content. And instead of waiting for 14 days, change that to, say, 36 days or 42 days or 3 weeks, 2 weeks, something like that. So basically what then happens is you change the cadence of your content. And that's quite interesting when you're kind of changing the cadence of content, because I don't know what it is. And there is almost a negative correlation where most marketing companies will say, send out regular correspondence. However, if you kind of look at it, the serendipity of content, you can't program it in. So there's a randomness element that I actually find does work. So anyhow, so this is essentially what a nurture campaign is. And normally, the traditional nurture campaign, send content, wait, send some more content. I always like to use the word additional content that kind of underpins the first set of content you send out. And when you're sending content out, a really good thing to think about is not to always talk about performance, but to have your content built around investment strategy, your fund's attitude to risk, and then talking about your performance. And again, building that out so that people actually have something more than just boring performance. And we've got data pretty much to back all that up. Okay, so that's the first part of your nurture campaign. Should you use a product, you've got the ability where you can take your templates, you can drag the templates that you want to automate. And should you be on our list, you probably get something like this, where we build an email sequence of after every 2 weeks, whether somebody downloads a white paper, registers for a webinar, we send out a sequence of 4 emails, part 1, part 2, part 3, part 4. One sequence of ours is this one, which every 2 weeks you receive, and the other sequence is actually randomized. So the 2 weeks could be 3 weeks and 4 weeks. And interestingly, there's a 13 to 17% better uptake from the randomness as opposed to the sequence. And again, I can't answer that. I'm not writing a PhD thesis on it, but if you follow Rory Sutherland, he talks about the serendipity of chaos. And so in that, there is some learnings. Okay, so this is, the 101 of drip campaigns for the cold leads you have. But what you can also do, there are a few more advanced things you can do. And when you're mailing your cold prospects, and remember, there's nothing, they're not engaging with you anyway. So you can pretty much, I wouldn't say bombard them with content, but you can be pretty aggressive, maybe a word less than aggressive. Anyhow, you can basically build what we call a remail campaign, which is basically after a week, if somebody hasn't engaged with you, you can just resend them the content. This actually generates, 10 to 20% more engagement with content. And then what you can also do, you can do split tests. And if you've got a mailing list that of inactive, prospects that you've been engaging with in the past, you can basically split the content out in an automation to say, take different messages. So let's say you're sending it, so you've got 3 different messages, you've split the content out. You basically send 10% one content, 10% another content, 10% to another channel, and then basically see which one works and then send it to the rest. Again, another great way to essentially stir that pot. And so what you're doing, you're not just blasting, there's some kind of intelligence and some kind of process, some kind of discipline that sits behind it. So these are automations that essentially underpin how you market. Well, I'm saying in this example, it's cold leads. You'd like to think you're doing this for all your leads, but for cold leads, really good way to do this kind of reanimation of contacts. Okay, so that's about identifying cold leads, nurturing campaigns, which I spoke about, the processes you need to have behind that. Content creation and distribution. So this is probably, every month we probably have about 200 plus inbounds to ProFuncom. We kind of nurture them through our process. The point where most smaller managers struggle is in this next part, and it's content creation, because it's so alien to what most smaller managers have been brought up to do. Marketing is looked at as something that somebody else does. Marketing, dare I say, is something that's a bit lowbrow for them. The really interesting thing, that I've learned, and I've got it on my board over here, is it's not the best that wins, it's the best known that wins. And the markets are saturated with very popular inferior products, right? And anybody who does the Android versus Apple comparison, you will know if you've got the new iPhone 16 and a Galaxy, which one's better, right? But it's the one that's marketed better that actually makes more money. And Samsung, by volume, sell more than Apple, but Apple, by margin, make way more than Samsung. It's all in the marketing, it's all in the content, and all in the distribution. So some really interesting strategies to look at. So I think in Excel, you basically need to create your content plan. And essentially, obviously, I always say, I think Mike Tyson said this, everyone has a plan until you're punched in the face. So you create content that you want to send out. You've got to get the manager to write it. You've then got compliance to approve it. You then miss your post. And then something else comes up. You've got to create a PowerPoint or do some due deal, send some due deal papers out. It's like, oh my goodness, I can't do my job. The trouble is, content creation is a job and a discipline in itself. And essentially, if you're not scheduling in monthly, quarterly times and ticking all those off, then essentially you might as well come off this webinar now. So I can wait for you to go. I'm assuming you're going to stay for the next part. So assuming you're going to create content, so let's say we've done that, you're going to be disciplined about it. You're going to split your lists up. You're going to split them into 3. You're going to do some marketing automation to see which works and which doesn't work. No one's dropped out yet. Fantastic. So the way you do it is essentially you break down your content into investment strategy, thought leadership, into webinars, into blogs. And then from that, you create short and long content and then distribute that content via social, via investor updates, via social, via LinkedIn, via the webinars you're running. And then once you've done that, you then take all that data, the content, make sure it lives on your website, and then push that data into your reporting tools, into your lead scoring, into your marketing automations, and into your CRM. Because the reason for that is not having a central repository for your data in your CRM, not having a way that is automated, which is in your marketing automation, having a way that is you're not able to score and have quality and qualify those leads coming in, and not being able to report on them. Again, if you're not doing that or you're not set up to do that, again, this process will fail. So if you've got the ability to create content, you absolutely need to have the ability to distribute it through your various email campaigns, your social, but you've got to be able to track that data, and then be able to distribute those reports internally. So that's the distribution, and I just jumped onto the tracking. With tracking, you want to be able to deliver those insights you're getting and surfacing those leads to your sales team. And a really good way to surface those leads, we call it in our product Marketing Alpha. So what Marketing Alpha is basically delivering to your sales team the contacts that have not engaged with you for the last 6 months that are suddenly engaging with your content. And we call this Marketing Alpha. So Marketing Alpha is in essence the endpoint of the journey we started with when we started this webinar, which is who are the people that have not engaged with us at all? Who are the people that have engaged with us a long time ago and sporadically are engaging with us, and people who were engaged with us but have suddenly dropped off? It's basically taking those contacts, applying the process of automation, applying the process of content distribution that you're sending to them. And again, it generally has to be something that is slightly left field of what you've previously done, just to spark their interest. Could be events, could be webinars, could be anything like that. And then delivering this Marketing Alpha to your sales team. So by delivering this information to your sales team, essentially you have taken just your time in extracting value from essentially dead contacts that you have. And essentially anything that is raised through these, any meetings that are created, any part of this now adding to the sales funnel is only adding to the bottom line, because the rest is all, again, as I said, these contacts are sunk costs already and you wouldn't be doing anything with them. So step by step, what you can do, you can build an automation to push, whilst again, no salespeople actually look at things, you can push this to essentially send an alert to them that somebody new has come in, or just send them an email. That's an automation that can be built out as well. So that's it basically. So that's our time, 25 minutes. I hope everybody found that useful. If anybody has got any questions, I'll be happy to take them. You can answer questions in the chat, or you can ask questions directly. Okay, good questions come in. The question is from Anonymous, so you can stay anonymous. What is the best timeline? You said 6 months. So again, it's 6 to 11 months. It just depends on how big your database is. If you're finding that people haven't engaged with you for 2 years, but their emails aren't bouncing, then that's as good a time frame to work. Anything else, I would say, yeah, I mean, even 2 years would be too much. I would say a year. I would also say if you're inviting people to physical events, that's costing you money. I would also say maybe you want to look at 3 months or a shorter window. The the key thing with all this is how much money you're spending. And this is meant to be a low cost activity stirring the pot. And if you want to do a webinar, I would recommend that. I wouldn't recommend for cold contacts taking them straight to an event. I think that's not such a good idea. Okay, another question's come in. The question says, could I have a copy of that spreadsheet? Yes, that's one of our most requested documents. I can send that over. Which CRMs do you connect to? So we connect to, like I said, the other products are available. It's not a question of that. We connect to a whole bunch of CRMs. They're listed over here. The key thing is taking data from your CRM, using that as part of your marketing automation, and then feeding that back to the CRM so they're not sitting in two different places. Having them sat in two different places means that it probably won't get looked at in the second place. Okay, any more questions? Okay, so that's it. I think we are done with the questions. Give it another 30 seconds. When is the report out due? Sorry, another question has come in. The report's due out Q4. It's currently being written. And if you're asking about the report, before the webinar started, I was talking about a report that we've done where we're looking at what fund managers are expecting next year. One of the big things that they spoke about was the dissatisfaction they have with their CRM and their marketing automation. There was a lot of dissatisfaction around how the leads were being pushed from the marketing team into the sales team, and also the lack of actual leads, cultivating leads. So hopefully that's what I've covered in this webinar. If you're on this webinar, you will receive that report. So that report, I said, is being written currently by Rosemary. So hopefully that will be out soon in hard copy and as an email. Okay, so I think we are done with questions. Let's check if anybody else has come up with a question. Okay, there are more questions that have come in. The third type of lead, so there are 3 types of lead, Emily. The first type of lead is the leads that are completely not engaged with you. Second type of lead are the people that have engaged with you in the past, but have now stopped. The third lead are people who are sporadically reading your content over a period of time. Here we go. Any data best to send mass mailings in terms of time? So timings is really quite interesting. It really, really depends, and you've just got to do the analysis. But Tuesdays is a bad time. Middle of the day, where everybody says, is a completely bad time. The best time is to say, if you're sending investor content, is when they're going to be sitting down and it's top of their inbox. So you've got to kind of work out when that is. It could be Monday morning, it could be Friday evening, and it could be over the weekend. I'm not giving too much away, but those is really kind of your data points you want to be looking at. So that's from Mario. Would you stop sending regular content to people who aren't engaging with it? The interesting thing is, Anonymous, is that when you've got content and people aren't engaging with it, you've got to remember that when we speak to, so we send content to people, right? Obviously, you're on the receiving end. Sometimes the fact that you're receiving content from somebody and they're not unsubscribing from it tells you there is something in the back of their mind why they're keeping it. Right? It's like having a DAD drawer. So I have a DAD drawer. I've got batteries, I've got rechargeable batteries, stamps, pens, pencils, all kinds of things. You keep it because you want it, and there's a reason for that. So I would just keep sending regular, valuable content to those people. Do we connect to HubSpot? No, we don't connect to HubSpot. HubSpot's a very different beast. However, if you use Excel, you can kind of pull all this data out. So HubSpot's very good, and Damesh, who I know, who founded HubSpot same time as we founded ProFundCom, they're just a very vertical platform. Their reasons to exist are very different to ours. Ours is we just want to serve the fund marketing community in a way that, you know, as I mentioned, they can raise and preserve AUM. Do you all do marketing automation? Yeah, pretty much. It's not, you've got to be careful with marketing automation. It can be a programmatic skill as well. So you want to be a marketer, not a programmer. The trouble with being a marketer is we're not always that disciplined. I'm a marketer by trade. It's like we're not all disciplined. So sometimes we need the tools to do the work for us. Susan, thank you very much. So quite a good question has come. After how many emails do you pick up the phone to call them? Totally up to everybody. That's a personal preference, right? I would go. You're just going to look at the response you get. That's just an intuition, right? Again, that's serendipity. You've got to kind of work that out for yourself. The good thing is that if you know how engaged they are, if you've got a rough sense of what interest they're showing in you, you know, you're going to miss all the shots you're not going to take, right? So go for that. From your view, is there a difference in lead management with hedge funds to asset managers? I think the type of fund you're selling, institutional versus retail, it's completely different. If you know allocators are the people you target, again, very different. And again, lead management on where they are in your funnel. So I did kind of skip over this in the interest of time, but everybody kind of talks about the funnel, right? And the thing that I've learned, thanks to a really good article by somebody I know who works at Dentsu, the middle of the funnel is a complete unknown, and anyone who says they can understand it is a liar and a charlatan. So it's a really difficult one. Lead management, it just depends where they are in the funnel. And I would say consistent content across multiple channels, trying to be front of mind on a regular basis is probably the metrics to go by, and having discipline that sits around generating content. If you're not being supported internally by creating content, it's very, very difficult. And when I'm saying creating content, it's not, oh, we're doing a post a quarter, that's it. It's people really need to understand your brand. People, you know, if I kind of go back to the previous slide, marketing is all about creating your fund narrative, creating your brand, doing demand generation, tracking engagement, and looking at the analytics. So that all kind of feeds into that. Okay, so I think this is going to be the last question. So thank you very much. And lots of anonymous people. So do you have suggestions in combining marketing material and in-person events? For example, hosting a dinner focused on X and how to embed in your outreach. I think the best outreach, you know, we have an event manager, but the best outreach you can do is invite people to physical events. And when you get people to the events, is just leave content, printed marketing material, and some takeaways on their chairs. And the great thing about doing in-person events is, assuming they're free, and everybody knows they're free, is to get people to bring a guest in the market. So all of a sudden, you've got a captive audience. And then in that captive audience, you bring in existing investors or stakeholders. And from there, that's how you create a really, really good buzz. You know, again, there are companies out there who will do events for you. It's like, you know, HFM, with intelligence. There's so many groups out there. But the only way you can control your own brand and your own narrative is if you just do things by yourself. And we've definitely seen that happen. Kepler, something we know, they do this incredibly well. So, but what I would say is if you're running events, make sure they're high quality. And yeah, that would be my sense. Okay, so that's a lot of questions. I didn't realize there were so many. So fantastic. Okay, well, have a great weekend, everybody. And we will be sending the replay out. If you've got any questions, reach out to me, and more than happy to take you through the nuances of marketing automation for fund managers. Bye for now.